Welcome to Private Equity Profits. Clifford Locks is a certified board of director, a trusted confidant to CEOs, C-level exec, and high-potential employees to help them clarify goals, unlock their potential, and create actionable strategic plans. Seth Greene is the nation's foremost authority on growing your portfolio companies with direct response marketing. He is the founder of the direct response marketing firm Market Domination LLC, and he is an 8-time best-selling author who has been interviewed on NBC, CBS, Forbes Inc., CBS Money Watch, and many more. Cliff and Seth interview top players in the financial sector, focusing on private equity firms, venture capital companies, and family offices, discussing developments and trends shaping the industry. These experts will share with you how they've grown their businesses and increased profit, and how you can too. And now, here's your host, Cliff Locks.
Welcome, everybody, to another episode of the Private Equity Profits Podcast. I'm Cliff Locks, your host. Today's guest is Ben Carmona, a managing partner at Perch Wealth, which offers tailored investment solutions with the potential for positive cash flow, capital appreciation, and tax benefits. With over 20 years of applied experience, Ben is an expert in real estate, investments, structures, and strategies. Ben, thanks for being on the show today.
Thank you, Cliff. Appreciate the opportunity.
That's a pleasure. Tell us about your background and how you found yourself in the financial world.
So, I grew up in a real estate household. My dad was always in real estate investing and finance. He had a foreclosure company. So I really, I started to love it early on. I didn't exactly know what I was going to do, of course, but I went to school at San Diego State, graduated real estate finance, got my real estate license. And, at that time, you don't really know what you're going to do. But I ended up in a niche industry in the securities world, in private real estate securities, also known as alternative investments. And I've been in that space now for 17 years, 15 of which I was actually on the syndication side, and that's where I really got involved on the acquiring of the real estate, the structuring of all sorts of private real estate offerings, private REITs, business development companies, variety of funds, and so on and so forth. So that's really where it started for me.
That's tremendous. Real estate in your DNA from your dad. And then think about all the different financial instruments that you became very knowledgeable on through your career. It's very, very strong. What makes you uniquely positioned to manage wealth?
Sure. Yeah. And really, that's all about my first 15 years of my career. I mean, I was part of big companies, a few of which started from the ground floor. And so being involved in so many different capacities within these organizations, I mean, from starting at the internal sales desk position, then I was involved in marketing, and then I got into the acquisition side and dispositions and underwriting and due diligence and marketing and structuring these offerings to take to market. And then I was involved in training and educating financial advisors and CPAs and attorneys and other professionals, as to how this industry works and how the products work. So we at Perch Wealth, I mean, I have a deep background in the folks on my team as well, but this is what we've lived and breathed for 17 or more years, and we've been on both sides of the fence. So the last 2 years, I opened up Perch Wealth with my business partner to represent clients and advise on investment strategies and structures that I'd been building for 15 years. A lot of people don't have that sort of experience on both sides of the fence.
You're extremely seasoned. That is very exciting, that the idea that you've actually put the structures together, the deals together, and now that you're on the other side looking to help very high and ultra high net worth clients in our private equity community with more due diligence and understand what their risk profile is.
There's no doubt. I appreciate you saying that. And I will say, and I often say this to clients, when I was on the sponsor side of the business, I learned a lot. You had a great run, but I got tired of the corporate world and the BS that kind of comes with that. But, I learned very valuable lessons. And this comes back to the clients, is I saw the way this business works. And, not to disparage the community of advisors, there's lots of good ones out there. But what you see in so many industries, and especially in ours, is you have, I don't want to say 50%, let's say 40% of the advisors out there that are representing clients in these transactions, which tend to be larger. They don't care about the client. I mean, it is a transactional, it's commission. And the other 40%, they do care about their clients, right? I mean, their heart is in the right place. But if you don't know what you're doing in this specific niche, it's hard to really provide that advice. And that's really where Perch Wealth started. Perch Wealth, in fact, the name itself, I mean, Perch, I often have clients, they say, why'd you name your company after a fish? It's not after a fish, a perch, an elevated view, offering better advice, more informed advice, and always operating from a moral and ethical high ground. So I know I just went on a little tangent there, Cliff, but
no, I appreciate it. I look at you and I say, Eagle, you really understand, man. And the prey out there are deals that just don't work, and we're heading into, probably a recession at this point. So we'll get into some questions here to really help our listeners understand, some of the nuances, because you've been long in this industry and you've seen the cycles. What are your basics for regarding investing, and what do you see as the foundation of sound investments?
Multiple layers to this, but I'll tell you one thing I took away from a college professor, and this is going back, 16, 17 years now, but it's amazing. It stuck with me this long, is he told us, it's not that hard to make money. And, as a 19 or whatever, 21-year-old kid at that time, you were thinking, what is he going to say? And he said, you just have to follow demographics. That's all it's about, right? So he goes, look, if at that point, he's like, look, the aging of the population, or the segment today, the boomers or the seniors, they're getting older. Now's probably a good time to invest in healthcare, right? And so that is one of the, especially in this market environment, and I'm, I say this to everybody too, I am bearish on the near-term economy, period, right? I do not have a good forward-looking feeling about the next 5 years. So it's all about mitigating risk. And pulling it back to my example right there is, what are those industries that are necessities, right? Multifamily, for example, today, there's a shortage of housing. You have the millennial generation swooping through. You have boomers or seniors in retirement, potentially downsizing and looking for affordability. So like that is just one. Multifamily we like, right? Because it's a necessity. The supply demand fundamentals make sense. And then, there's other layers in terms of, we just don't like any multifamily. Then you have to go into the price per square foot and the rent and the affordability. But those are staples, healthcare, multifamily, even oil and gas today, we're pretty bullish on. But we're all about mitigating risk and downside protection and creating a balanced portfolio.
So cash flow plays a major role for you at this point. You're funding your deals where they make the cash flow is actually going to allow this to happen. You're not waiting for an exit to make the profit.
Correct.
Okay.
Correct. Yeah.
No, I was going to say you have a conservative view and you're going to have a very handsome exit later on, but everything works financially through your purchasing on the front end.
Yeah. So our investors are accredited or high net worth, and most of our clients have made their money, whether it be in real estate or whatever their business is. And today they're looking to reduce volatility.
Excellent.
And create more stable, predictable, tax efficient income. They don't need to hit home runs anymore, right? And so they're looking for stabilized, defensive, resilient investment strategies that provide that, 4, 5, 6, 7, 8% annual income stream. Some don't have appreciation at the end. Some of them do. But that is just the market that we're in today. And I tell all the clients, look, if you're looking for monster returns, we're not your shop. Okay. We just don't view the world. The additional risk you're taking on to potentially get that additional return, it just doesn't line up today.
That brings me to my next question. Are there alternative investments a safe bet, or are they high risk and high reward?
Sure. Yeah. All investments carry risk, right? And We don't blow smoke. We don't say, look, anything's a guarantee. But again, I would argue, and you'll see lots of publications in the market more and more today, and I've seen this industry evolve. There are some big players out there, including the endowments and the institutional world, that are moving to a 40% alternative investment allocation. So the old traditional model of 60-40, stocks and bonds, cash, we saw that break really in 2009. It did not work. And today, I'm getting off track. So yes, the alternative investments, there is a real place for them. There's a need for them. There's a variety. There's hundreds of different opportunities out there. We feel that the offerings that we bring to the table, because we know the syndicators and the operators so well, and we know those strategies so well, we have a very high comfort level with the opportunities that we provide.
So let's move into, what is the trending in alternative investments right now?
Why kind of the trend?
Well, in other words, when you look at the growth that's taking place, you have funds coming in from overseas, BlackRock and other major players going into multifamily. So it's competitive, but you've picked out a niche where you're really looking for returns that are very consistent for your investors. They can count on it. So it's risk weighted in their favor to have a positive outcome. So I'm looking at, what does the trend look like? In other words, let's just assume we're going to probably, the economy is probably not going to continue to move, in the same level it has with the stock market at this point. I think they really have created some challenges when it comes to the energy. We were sort of self-reliant. We were exporting. I see that's collapsing at this point. We're at about $150 per barrel. Reports being published, we could go to $10 a gallon for gasoline. I'm looking at diesel fuel at $6.50 a gallon. I mean, that's not really sustainable. So I'm interested in your feelings. What's the trend at this point, for your clients?
Yeah, absolutely. And it's a great question. And it's part of the reasons why I'm so excited I have been in this industry and to be in it today, because the trend in the alternative space is going to continue for many, many years to come. And I've seen, again, this evolve. More and more financial advisors, registered investment advisors, clients are now in tune or becoming aware of this other basket of, alternative investments. There just hasn't been a lot of education in the market. It's been a sector really that the institutions, the endowments, the big boys have benefited from, and really the retail investor hasn't participated. But they're waking up to that through more offices like Perch Wealth that are focused on this alternative sector. We're providing that education, and we're showing them why it makes sense to them. I mean, you look at the basket of opportunities. Folks are over allocated on equities. They're over allocated on bonds. You don't want to be in bonds with interest rates. Stocks, I do not feel comfortable at all with. What do you do today? How else can you reduce volatility, reduce risk, and create that income stream that will help you go into or maintain retirement? And that's where the alternative investments can come into play.
Solid business model. What are the best funds to invest in? Does it differ for different clients?
Yes. Another great question. It's just like building a portfolio. And I'll just give you an example. Of course, I mean, if a client comes in today and they're not dependent upon the income at all, right? I'll just give that example. They're looking for, again, lower volatility. They want stable income. They want growth. They want inflation protection. I'm probably going to recommend sectors like, private multifamily funds. These are all private real estate investments, potentially, assisted living. These may have slightly lower income streams, but more appreciation potential as, especially in an inflationary environment versus, a client that really is dependent upon the income. They want more income. So then, we'll go into and we can create a blend of these, but like a single tenant, triple net, private single tenant, triple net REIT portfolio, very diversified, investment quality, long-term leases. That is not going to perform as well as a multifamily in an inflationary environment, but it kicks off a lot more income. And at the end of the day, if income is what's important, and your downside is protected, then that's what we want to provide. Now, of course, a smart thing would do, you slide some inflationary protection in there along with that higher income. So to your question, yes, every portfolio is slightly different based on the client's profile, but at the end of the day, they're all looking for the same thing, which is that stable, predictable, tax efficient income.
So you can create a blend that's really customized for the client, really rich educational conversation to help them make some good decisions for their family. One of the things I'd like to cover is about the next generation. A lot of our very high and ultra high net worth listeners at this point have children and they're raising them. The ability to provide that young person $5 million,
right,
to come to your fine organization and deploy that money and get educated on how to put a portfolio together with your expertise and to build the confidence they need and understand that risk reward. You guys are very open to that. Do we agree with that?
Absolutely.
Okay. So you have the patience and the time, and you're happy to provide the education and the mentorship for the next gen.
Oh, well, without question. And thank you for even bringing that point up again. And I didn't speak enough about the team. I've talked a lot about me, but the team, my business partner, Ahud Gerston, and the folks that we have on our team today are the best of the best. I mean, CFAs, MBAs, CPAs, attorneys. And again, we built this company to fix what we perceive to be the issues in this market, which we do not sell. You'll never get pressure from us. We educate and we advise. We never sell. And we love that. I love educating. That's really what drives me more than anything. And I can say the same for my business partner. So the answer to that question is absolutely.
Let's go back. What are the challenges and pitfalls associated with investing in real estate, and how do you overcome them?
Sure. I've been, again, 17 years is a drop in the bucket compared to, some of your listeners, right? They go, who is this kid? 17 years. But I'll tell you, I've been through, a couple of cycles and I learned a lot. And that's why, back to one of your former questions is, what do you look for in terms of due diligence? Looking at a sector is just one piece of the puzzle. When we're looking at, and this goes to, protecting yourself in real estate, you have to know the sponsor or the syndicator, the operator, right? It's so important to know the folks that you're investing your client's money in XYZ company to do their job. And if you don't know that, senior staff down, you don't know how they operate, that's a risk, right? So you want to know the folks that you're working with, the folks that you're entrusting your client's money with. And then, of course, the sector, and then, down to the structure itself, right? The fees, is there an alignment of interests, right? All those types of things. Again, risk is unavoidable, but we always say it can absolutely be mitigated if you are not only diversifying, but you're checking all three of those layers. It's the sponsor, the syndication, the structure, the strategy, the fees, alignment of interest, all the way down. And so that's what we do. And again, we've had real life experience living through the good and the bad times in building these. So we kind of know, how it works.
The operators, it's really important. Are there recession-proof real estate investments?
I'm in the securities world, so nothing is just like nothing's recession-proof. Okay. I would say recession resilient, right? Excellent. Never want to be misleading, and proof at those industries that are necessity-based, right? Whether it's housing, whether it's healthcare, the industries, right? The necessity-based industries that are always going to be in demand. Like, right now, and this is the obvious, retail, it's got some hair on, right? You just don't know where that's going to go. There could be great opportunities in retail if you bet on it. But again, at this point in the economic cycle, we're not looking for major home runs. We're looking to hit singles and doubles until there's more clarity in the market where we feel comfortable to step out. But right now, it's protecting the downside. Did I answer that question, Cliff?
You did very, very well. And it leads me to this. Do you see any trends in real estate or the private equity markets?
Yeah. I'll say this. As bearish as I am with everything going on with the economy right now, I look at where do you want to be? And where do you want to be? And if you go back to the 70s, and I think we're going to be in a major period of stagflation like we saw in the 70s. If you go back there, what historically has outperformed, I should say. And it's been income producing real estate investments, period, right? They behave better in inflationary environments. They're hard assets. They're income producing. And I hate to say this, even if they're the least of the losers of all the segments, right? If we go to a major recession,
Sure.
I still firmly believe that allocating cash or diversifying away from the stock market or bonds and getting into private income producing real estate today is one of the best places, if not the best place to go in light of the current environment.
Thank you for sharing with our listeners. That's sage advice, and I share your views. Is there anything I haven't touched on that you would like to add?
Thank you for asking. There's one thing, and I should have brought this up earlier, but and this is partly due to our environment today, but probably about 50% of our business or time is spent working with 1031 exchange investors, right? So these are folks that are selling investment property. They don't want to pay tax, so they want to find replacement property. And we work with a structure that's widely unknown, Delaware Statutory Trusts. And they're a godsend for so many investors. So and we can read up on the website more. I know we're running out of time here, but
you're doing fine.
Again, DSTs, it's a turnkey replacement property solution for investors that are looking to get away from active management, move into passive management, and of course, defer the taxes upon sale of your investment property. And again, the structure has been around since the 80s, but in 2004, under Revenue Ruling 2004-86, the IRS blessed this type of structure, right? It's just like an LLC or a REIT or an LP. They blessed it for 1031 purposes. So it's a vehicle or structure that holds title to real estate, most of which this real estate's institutional quality. It may be a $100 million multifamily property in Dallas, Texas, or a $200 million Amazon distribution facility in Raleigh, North Carolina. The trust holds title to it, and it allows for fractionalized ownership. So you can have hundreds of exchange investors invest in a property that's already acquired and owned and professionally managed in a few days, as opposed to going out, right, working with the 45-day timeline, trying to find property, which doesn't exist today because it's such limited inventory. So I wanted to put a little plug in for the DST and the 1031 exchange, because that falls right into our wheelhouse.
That's key. I've interviewed 36 people already. You're the first one to bring that up. I want to thank you for sharing that with our listeners. That's really important because there's a lot of pressure out there on that 1031 exchange on the timeline. And here you have a solution. Very important.
Absolutely. And if you get interested, I think you probably will, we can come back and we can do a segment on the DSTs because it may be warranted.
Very important. Thank you for that opportunity also. How can our listeners contact you? Are there any links you would like to share?
Yeah, so our website, www.perchwealth.com. Visit us. All of our contact information is up there. You have links we have a tremendous amount of education and content as well, talking about the private investments. That's the best place to go. Of course, you can feel free to call me on my cell phone, 818-269-4972. We have advisors throughout the country, but yeah, you can call me or go to our website. We'll respond to you promptly.
No, I appreciate that. And also looking out for the next generation of our listeners. That means a lot to me too. Absolutely. I want to thank you so much for your time, Ben. All your work within the financial industry has honed your business instincts and acumen, making you uniquely qualified to share your insights on how products are structured and operated. I thank you very much for sharing your insights with us. I want to thank our listeners. I look forward to being back with you shortly for another episode of the Private Equity Profits Podcast. This show has been produced by Market Domination, LLC.